Hi there, I'm Irked, and this is my channel Get Irked, where I teach you how to invest for the long term. In today's video, we're going to talk about my favorite hobby, video games. Specifically, the top 5 video game stocks that you can buy right now. Real quick, if you could, please smash that like button and hit subscribe. It really helps me out. Thank you so much. As always, I'm not a professional, so take that into account before buying any of the positions we discuss in this video. Let's get started. I'm presenting these 5 stocks in alphabetical order. There's no preferential treatment as to which one is better. I like all 5 of them. In fact, I hold all 5 of them in my portfolios. First up, Advanced Micro Devices, ticker symbol AMD. AMD has both a consumer unit as well as a thriving enterprise unit that makes servers. However, for the purposes of this video, we're going to focus on the consumer division, which includes the consoles as well as CPUs and GPUs for PCs. Currently, AMD has the console market almost cornered, as it is the backbone behind both the PlayStation and the Xbox. The Nintendo Switch is powered by AMD's competitor, NVDA, which is also one of the 5 on this list. Let's take a look at the details. As you can see, AMD has an earnings per share of $2.84 and a PE ratio of 38.97. In AMD's case, it is a bit overvalued, but AMD is such the best in breed, beating the pants off Intel in terms of CPU production right now, that it's earned that valuation. It is earned a premium. Unlike some of the other competitors that AMD has, they've chosen not to give a dividend, so it has no yield. You really don't want them to give a dividend. You really do want them just to reinvest in the company. Now let's take a look at the charts. This is AMD's monthly chart, and you can see that it has had a meteoric rise from being an also-ran to a leader in the pack. AMD has risen from a low of $1.61 per share to an all-time high of $122.49 per share. Given that this chart starts in June of 2015, we're going to switch to the daily chart to give us some better levels on where we could pick up some AMD right now. However, real quick, you can see that on the RSI, or the Relative Strength Index, AMD is seriously overbought right now. It's almost overbought on the weekly, and it has just exited supreme overbought territory on the daily. So instead of using its initial bottom, let's also use a Fibonacci retracement from the March 2020 low. AMD is about 10% off the high. However, since that's the all-time high, this may or may not be a place where you'd want to start a position. It all depends on how comfortable you are. So we could start a position around $110, or you can see that we've also got support down here around $106. Either of these places are probably going to be likely pullbacks if the market sells off at all. After that, you can either use the Fibonacci retracement, where we've got a $94 support around here, we've got around $90 here, or you can use the 200-day moving average, which is at $86.61, and you can see that AMD regularly pulls back to the 200-day moving average and sometimes pulls below it. So it's important to incorporate several different buying opportunities into any plan you might have to get into AMD. In addition to support around $80 and $76, you can see down here in the low 70s that we've got support somewhere around $73 as well. So there are a lot of buying opportunities. You can see that during the pandemic, AMD pulled back from its then all-time high 38% before finding support. This isn't unusual for the semiconductor plays, and you'll see that in NVIDIA as well, another play in this video. Next up, Logitech, ticker symbol LOGI. You may be familiar with this company, as it is a huge maker of keyboards, mice, webcams, and a whole bunch of other peripherals for computers. They also make video game console peripherals, including game controllers and a wide variety of game controllers for PC gaming as well. Logitech is really the best in breed when it comes to the video game space, but additionally it has a work from home kicker because its webcams are second to none. So let's take a look at the details. As you can see, Logitech has an earnings per share of $6.17 per share. It also has a relatively reasonable price to earnings ratio at 17.44. Additionally, what makes Logitech a little unusual for the video game sector is it also carries a yield. Now, it's not huge, it's 96 cents a share, but that works out to 0.9%, almost a 1% dividend yield. Let's take a look at the charts. You can see that Logitech has had a pretty spectacular run since the pandemic lows. Let's draw the Fibonacci retracement just to see exactly how far it's come. So from its pandemic low of $31.37, Logitech has risen to an all-time high of $140.17. Since its all-time high, Logitech's pulled back nearly 25% to its current levels, right above the 200-day moving average, which means this could be a very good place to start a position. So assuming that you started a position around $107, what are some other levels we could look at? While the 50% retracement is down around $86, you can see that there's key support right around here at $91.41. So that would probably be a good second place to do a buy. You can see also that when Logitech does experience a sell-off, it sells off pretty substantially and has a real key capitulation point. A point of capitulation is where all the sellers are washed out of a stock and it suddenly bounces. You can see here that we have another capitulation point of support down at $75.94, or round up to 76, followed by another key support down here at $66.78, and historically the 78.6% retracement down here at $54.65 seems to also provide support. While you could accommodate a plan that takes into consideration a possible pullback to $31.37, I think that is highly unlikely. You can see that when Logitech reported earnings recently, it pulled back dramatically, even though the earnings were a surprise. This is likely because a lot of investors feel that Logitech is a work-at-home play and won't be as successful in the future. I disagree with this assessment. Because of this, Logitech became oversold on the daily chart, which means this is definitely an interesting time to buy. Given that Logitech is platform agnostic and has a dividend yield, I really like this one as a play for the long term. I've held it in my portfolio for years and it's done really well by me. Next up, Microsoft, ticker symbol MSFT. You're likely familiar with Microsoft as the makers of Windows, Office, as well as the Xbox division. Microsoft is responsible for both their hardware and their software, although they do use AMD's combination CPU, GPU, which is called an APU. What makes Microsoft an interesting play is not only is it a diversified company, it is a leader in the video game space. However, because it has exposure to the cloud and it has exposure to office environments, Microsoft kind of has a diversified protection in case something happens to the video game space and it becomes less popular than it's been throughout the pandemic. Let's look at the details. As you can see, Microsoft has an earnings per share of $8.05 and a PE ratio of 36.38, which does make it overvalued. However, just like AMD, Microsoft has been an excellent performer for years now, so it deserves a premium when it comes to valuation. Like Logitech, Microsoft also carries a dividend yield. It pays $2.24 per share, which at the prices of this video works out to 0.76% annually. Let's look at the charts. Just like the other companies in this video, let's do a Fibonacci retracement from the low of the pandemic to its all-time high. Let's find some likely support levels. We've got one right here around $286. You can see that we had a key pullback to $274. We've got another one down here around $265. You've got the $255 retracement. You've got the $243.24 200-day moving average. And then below that, we've got even more support levels, and you can keep going. It all depends on how aggressive you want to be. When we look back at the March 2020 sell-off, you can see that Microsoft sold off more than 30% from its high. A 30% sell-off from its current all-time high gives us a price target of $205. However, it would require a serious black swan event for it to sell off quite that much. That being said, it's always up to the individual investor whether or not he or she takes that kind of thing into consideration. Personally, I always prefer having cash on the sidelines so that I can buy during a black swan event. I'd rather miss out on buying as much as I want because it didn't pull back as much, rather than have it drop even further than my last buy and me having no cash to add more to the position. Next up, let's look at NVIDIA, ticker symbol NVDA. NVIDIA is considered the leader in graphic processing units. In addition to this, NVIDIA also has a server unit, an artificial intelligence unit, and an autonomous cars division. However, all that being said, NVIDIA is still known for its gaming graphic units. Let's take a look at the details. You can see that NVIDIA has an earning per share of $2.12 per share, and you can also see that it has an extremely overbought price to earnings ratio at 95.45. NVIDIA is one of the fastest growing companies in the entire S&P 500, and because of this, it's going to carry quite a premium. It's always going to feel expensive. NVIDIA also carries a dividend, but because it's grown in share price so fast, the dividend is completely negligible at 16 cents a share, which works out to 0.08%. So this is definitely not a company you want to buy for the dividend. Let's take a look at the charts. You can see in the March 2020 sell-off sell-off that NVIDIA sold off almost 43% from its all-time high. As a long-time holder of NVIDIA, I can also tell you that a 35 to 40% sell-off is not rare for this company. You can see on the relative strength index, NVIDIA isn't overbought on the daily chart right now. However, it's much closer to being overbought on the weekly chart, and it is just cooking on the monthly chart. It is supremely overbought. Now, as I've said before, does that mean we're in for a big sell-off? Not necessarily, but it's definitely something to keep in mind as an investor. So where are some interesting places to start a position right now? Its most recent low was at $194.30, but it also found support down here at $178.66, and its 200-day moving average is down at 152. However, when you look at the past, a better support may be here at $155. However, if NVIDIA sold off 40% from its all-time high, that means you'd have to keep $125 in as a price target as well. Because this one's such a high flyer, it may require a strong stomach, although with all the prospects it has for the future, it's really hard not to see NVIDIA as a really strong long-term performer. Next up, my dedicated video game producer in the space, Take-Two Interactive, ticker symbol TTWO. Take-Two Interactive is considered the best in breed in the space, and although it can be difficult to buy a video game company that doesn't necessarily make your favorite video game specifically, when it comes to investing in the video game sector, it's important to invest in a company that has consistent track records. Take-Two is the company behind such amazing hits like Grand Theft Auto, Red Dead Revolution, NBA 2K, Borderlands, and many, many more popular video games. They've also proven that they know how to have ongoing revenue streams, as Grand Theft Auto 5 is still a huge producer for the company as people play it online and use real money to buy in-game stuff. Let's look at the details. You can see that Take-Two Interactive has a earnings per share of $5.61 and a PE ratio of 28.56. While that does make Take-Two Interactive overvalued, it's not nearly as overvalued as some of the other positions that we've covered in this video. Take-Two currently offers no dividend and has no yield, and I don't anticipate that to change. The video game industry is such that it's difficult to offer a dividend for the long term when you're a software maker, as you need to invest in your new titles. Let's take a look at the charts. From its pandemic low of $100, Take-Two has risen to an all-time high of $214.91. However, with many analysts believing that we might not see video games remaining as popular as they were during the lockdown, Take-Two has pulled back a pretty significant 26.5% from its all-time high, which makes right now a decent place to start a position. So you can see Take-Two has support just under the $160 mark. You can also see that it's significantly below its 200-day moving average, and when it's in an uptrend, it doesn't typically do this. So it's not a bad starting point at all. From here, you need to find other key levels, and you can see that the 61.8% retracement at $143.90 has provided support in the past almost to the penny, with this low being at $144.14. From there, you can also see that the next Fibonacci retracement at 78.6%, around $125, has also provided support in the past. And then finally, it is potentially possible that Take-Two could pull all the way back to its $100 low during the pandemic. From its high to its low during the pandemic, it pulled back 25%. However, it's already done that now, pulling back from $214.91 to $155.40. Once again, making the current prices a decent place to start a position. All that being said, it's hard to know where the video game industry is going from here. With everybody who's been released from lockdown, most analysts believe that the video game industry is going to maintain the popularity that it has. However, a lot of investors have taken profits and are a little bit nervous given the fact that everybody's playing outside. Personally, I think the video game industry is just growing further and further. It is the biggest entertainment industry. It brings in more money than any of the other industries, including the movie industry. For the long term, I believe investing in video games is going to continue to produce returns. It's why I hold all 5 of these stocks in various portfolios. What are some other investing themes you'd like to learn about? Leave them in the comments. Thank you for watching. Please like and subscribe, and I'll see you in the next video.